Awesome. Welcome everybody. We just opened this up. We're right at 7 o'clock. I know everybody's kind of getting in here, getting settled in. So in the meantime, just can you use the chat here and just make sure that you guys can see the screen, you can hear us and all that good stuff, just to make sure we're all okay that way. I'll start us out here. And so will Ryan. Awesome. Perfect. Thank you guys. So we're going to be filling in. We're going to get started right away. We do have a lot to cover. I'm going to try and wrap this up, the main part of this by 8 o'clock, and then kind of leave it open a little bit for some questions, comments, things like that, talk about everything. So bear with us. There is a lot of information to cover in this hour. It's going to sound like, I'm going fairly fast. But it's just trying to get us out at a reasonable time. And don't worry if it starts getting a lot of information and you're not, retaining it all, that's okay. This is being recorded by, I'm hoping by tomorrow, if not the latest by Friday. You guys will all have a copy of the link to rewatch this in case you want to catch up on it, rewatch anything you missed or anything like that. The other thing, the next best thing to that too, is if you don't want to wait any longer, we're going to keep putting this in the chat a lot. This is a booking link. So what this is if you want to go over something in a more one-on-one, either a phone call or meet or whatever, book a call with us. This goes directly to our calendar. That way you can set up a time that works for everybody and we can have a one-on-one talk. So I'll keep putting that link in. Just that way we can, in case you get more personal questions you don't want to put in a chat, which is fine. But the main thing for this thing is use that chat as much as you can. Ryan and myself are on here. Ask questions as we go. I will be flying through this thing, but Ryan will be on here to answer all the questions. And if we can't get to it by 8 o'clock, like I said, we're going to stick around to the end for questions, comments, things like that. So, but again, thank you guys for showing up. We're really happy. We're really excited for this. Thank you for taking time out of your day. There's quite a few of us on now, so we're going to kind of get rolling in this. Again, if you get to leave for anything, you will get the recording of it. So we're going to go ahead with this. Thank you again for taking time out of your Wednesday evening. We appreciate you being here. When you first signed up, you would have got that message that says, as a thank you for signing up, that you're going to get a copy of a complete guide to buying a home book, which is chock full of some really good info on buying a home, plus a really condensed version of this in a buyer's guide. So you guys will be getting that plus the recording all in an email. So you can read that at your own pace on your e-readers or phone or tablets or whatever. So again, thank you for that. Okay. So a little bit here, as a first-time buyer, we're here to learn about what it takes to buy a home, right? And with social media, the way it is, and the news and things like that, it can be quite daunting these days with low inventory and just the fast-paced market. So it's not nearly as easy as it was. I remember when I bought my first house, the difference from then till now, but it's something that's definitely still doable. Ryan and I have helped many first-time buyers find places in this market. So if you guys are feeling any of this, it's completely normal. We all felt it when we bought our first house. Our goal here is to at least alleviate most of these, to make you feel like that there's people there to help you. There's ways of doing this, and to not be so stressed out about this. So before we get into like the really main stuff to all this, we're going to do a little bit of intro, just so you know who we are and that we actually know what we're talking about. So first and foremost, my name is Andy Goddard. I'm a realtor here in Saskatoon. I've been doing this for over 3 years now. I'm with eXp Realty. We are a fully cloud-based brokerage, which means we do not have a physical office in anywhere in the city or anywhere in the country, really. So if anybody wants to meet for a face-to-face, I'm still okay to do that. We just got to meet at another coffee shop or a place that works for you. But in those last 3 years, I've helped, between Ryan and myself, we've helped many satisfied buyers and sellers throughout Saskatoon and surrounding areas. I say surrounding areas because I do live in Warman myself. We've called this place home since 2016, but I am born and raised in Saskatchewan along with my wife. She was also born and raised in Saskatchewan. We live here in Warman with our son and daughter. And we love calling this place home. I love calling Saskatchewan home. So I'm really happy to help other families start their home buying journey in this great province. So what I'm going to do here really quick for you guys is I'm going to put another link in here. This covers all my social media accounts. So if you want to follow up on day-to-day stuff with real estate and things like that, all my accounts, both my business and personal ones, are on there. Feel free to check it out if you want. But one of the important things when it comes to real estate, buying a house is a big deal. Unless you have cash, the majority of us are going to need a mortgage. And real estate is a big team effort. Without, one or the other, it doesn't work very well. So I have partnered up with a fantastic mortgage broker. We've been doing this, like I said, for the last couple of years. A great team effort with us all. With real estate, you need somebody to help you with financing, and there's nobody I found better that can help than Ryan. And so I'm going to pass it off to him so we can do a little bit of intro for you guys.
Well, good evening, everybody. I am that beautiful bald head that you see on your screen. My name is Ryan McEwen. I work with the Mortgage Group here in Saskatoon. As Andy mentioned, we do cover the province. So because we are Saskatoon based and Saskatoon and surrounding area based, we cover many areas of the province. Andy and I have done deals all over Saskatchewan, from Regina all the way down south. We've done lots of deals here in Saskatoon and surrounding area. So don't be afraid that if you do have something that might be slightly outside of the city or down in Regina, don't think that you can't engage our services. We're more than happy to help you all the way through. So I have been in the mortgage industry here in Saskatchewan for over 20 years, long time. I've worked for a lender, I've worked for a mortgage insurer, and I've been a mortgage broker as well. So I've been all over all sides of this business. I've been doing this a long time, and I've seen a lot of different things come through the industry. So being able to navigate difficult situations, unique situations, is really our forte. Being able to help people with maybe some credit issues, people that are newer to Canada, things like that. We can really work our magic, and we have a lot of products and options that we can really help you out. So as I mentioned, I've been doing this for over 20 years. I do live in Saskatoon directly, right in the Stonebridge area. So for anybody that is right in the Saskatoon area, we may be neighbors. I've been married for almost 30 years to my beautiful wife Michelle, and I have two wonderful boys. So I'm a family man. I really believe in the great things that happen when you get into your own home. Renting is nice, but owning, really starting to develop your own equity, building your equity up through your own home ownership is something else that we really want to make sure that we can bestow on all of our friends. So helping them get into housing, really, really important. What you're going to notice that as we go through tonight, you're going to see that booking link come up a lot. When we do post that booking link on, I'm just going to post it here so you can see what it does look like. When you do see this come up, what this is a direct booking link to speak to Andy and I directly one-on-one. What we find is each situation is really unique, and it really depends on your unique situation, how we best tailor the needs for the mortgage and the real estate side. So talking to us one-on-one, really where you want to go after we get you all the information today. The other thing I want to really focus on is the chat room. If you do have any questions at all, please feel free to use that chat, ask away. As one of us is talking, the other one's really going to be monitoring the questions in that chat box. So please ask if you do have any questions at all. What we typically find is that if you do have a question, somebody else is also wondering that same question as well. So don't be afraid to ask away and post that question in. We can quickly get that answer on the chat room so everybody can see it. All right, I'm going to pass it back to Andy to get things started.
Awesome. Thanks again, Ryan. Appreciate that. So that's who we are. This is what we do. We've been doing this, like I mentioned, for the last few years, helped out a lot of people during this. The biggest takeaway I want to give with all this is that we're going to show you a lot of things to do with buying a house, but the biggest takeaway is we're here to help show you what it takes and to save you money in the process too, because this is a big purchase. We want to make sure you save as much money as you can while we do this, okay? So we're going to get into this now. We're going to get rolling. Like Ryan said, use the chat as much as you can. It's going to be very helpful while we fly through this. So This slide alone, I could probably spend hours on just because there's so much that goes into the home buying process from start to finish. But this is typically kind of what happens and start to finish, right? So I always try to educate buyers, whether you're still renting, living at home, new to Canada, whatever. I try to give as much info as I can to help you make an informed decision. Again, that's why we put this webinar on, is to help speed that process up. But the main and most important thing when it comes to buying your first home, especially in this really low inventory market, fast-paced market, is you need to have a pre-approval. We're going to stress this a lot. We'll explain a lot of it why, but that is the first step to doing it, so we know what you can afford, right? And work things with that. Once you have a pre-approval, then we sit down and figure out what kind of property works the best for you. You know, are you single, or a single cut, or just a couple, and you're wanting to travel and don't want things to do a lot of maintenance? So maybe a condo is something for you, or you have a family, you need a big open space, right? Kind of a mix of that, of a townhouse condo, right? Whatever fits you is what we're going to look for in that budget. Okay, we're going to look online, look on the MLS, figure out what's available, and start actually looking through houses. That's the big thing, is looking at the places, getting a feel for it, understanding what to look for when you're purchasing it. And the first couple times is going to be pretty daunting, because most people don't know what exactly to look for. That's what we're here for, is to show you the things that you wouldn't typically look for, and in case there's any issues. And we are the first to tell you that if there is some issues with this house, you are going to be the first to know. That way we're here to protect your money. Okay, so we find the right house, and this is when we sit down and we write an offer to purchase the property. Now, my goal is to negotiate as much as I can for you, again, save you money. But again, with this low inventory market, sometimes negotiations are a lot more harder these days, especially if you run into things like multiple offers. Okay, so each property is going to be different. We just walk through that as we go. But say we do write an offer and it gets accepted, this is what you're going to hear a lot. You're going to hear conditionally sold. Okay, that means the sellers have accepted an offer on the property. It is off the market, but it still can be marketed as available until they remove all the conditions. Okay, so we're going to hear that a lot. Conditionally sold just means that somebody has wrote an offer and the seller has accepted it. They're just going through some final checks to make sure the house is okay for the buyers to proceed with. So if you were to buy the property and get an accepted offer, conditions have to be satisfied for you to be okay with it. You have to be okay with these conditions, and usually they are conditions of financing is a big one. So you're getting a mortgage. They now know the purchase price of the home and the property. They're going to go ahead and do the final approval. So they need time to do that. Also, another condition is a home inspection, right? Make sure that the home is sound. There's no underlying issues to worry about, right? Those are kind of things that you need to be okay with. Obviously, if you're not okay with any of the conditions, we can walk away and find something else, but we'll get into that a little bit later. But that's what that means. So once we go through the whole review period of financing and home inspections, and you're satisfied with everything, we remove all the conditions, and that's when the house is actually sold. Now it's completely off the market, sold to you. We are now just waiting for possession date, and possession date could be anywhere from a week or two after removing conditions, to a month if there's owners in it, to 2 months or 3 months if there's tenants in there. Sometimes with tenants, you have to make sure that you honor the remaining lease. And again, all properties are different. We kind of take that as a property by property basis. But once we have keys in hand on possession date, we meet at the place. We do a thorough walkthrough to make sure the house is still the same as it was when we first looked at it in inspections. Make sure there's no issues that are there that we can get the sellers to fix for us. And if, as long as everything's good, then you are now a first-time homeowner. And it's essentially that simple, even though it's not that simple. There's tons of stuff that goes in between all that. There's contracts, there's everything that we all go over on a more one-on-one basis, just because every property is different. Okay, so if anybody's got questions on the buying process, throw it in the chat. Let us know. If not, we're going to get into the main stuff here, where it's talking about pre-approval, how to get pre-approval, and the mistake of not getting a pre-approval. Okay, so as I mentioned earlier, getting a pre-approval is huge, right? It's going to determine a lot of things. Number one, it's going to let us know what your budget is. What can you afford, right? we want to make sure we shop in that range that you can afford, because if we don't, we've had people that started shopping in the 450 to $500,000 range, but found out after that they're approved for 350 to 400. Going from 50 to $100,000 difference of a house is quite drastic. So we want to make sure that expectations are set where they should be, and that we shop where what you can afford, and we can find the right property for that range, right? So if you're approved for 400, we don't have to find something right at 400, but we're going to know that that's our ceiling, that's our max. And the other good thing about getting a pre-approval is, again, with this low inventory, fast-paced market, if we're going up against multiple offers, the sellers are going to want to know, are you pre-approved? If we say, well, no, not yet, they're just going to move on and go to the next person who is or has the cash, right? So this is very strong in helping you win offers, especially in this market. So this is essentially how a mortgage approval works. This is the three things that go to make this all work. So there's three, and these all have to work together, right? If one doesn't work, it doesn't work at all. Okay. So the first thing they're going to look at is credit, right? They want to make sure that if you have any debt, do you pay this debt off on the right, like on regular payments? Have you missed any payments? Have you had collections calling? Do you have maxed out credit cards that aren't getting touched, right? Have you been through a bankruptcy? Have you been through debt consolidation, right? They need to see what happens when you borrow money and how well are you with paying it off. Car loans, same thing, right? So they want to look at that. For anybody who is new to Canada, kind of take this stuff with a grain of salt right now. There is a new to Canada program that Ryan will talk about, just because you don't quite have the history built up yet, but we have a program that helps with that, right? So, but that's what they look for credit. With your income, same kind of idea. They're going to review your income, see obviously how much do you make and what can you afford with the debt that you have. What kind of a job is it? Are you paid salary? Are you paid hourly? So then they're going to need either a couple pay stubs to verify it, a job letter if you're on salary from your employer that states you work a guaranteed set of hours with this guaranteed pay. That's very helpful. Things that really are detrimental to getting a mortgage is anybody who works either commission-based pay. So as a realtor myself, I'm commission-based. Car sales are commission-based, right? Anything that's commission-based is hard to use because there's no guaranteed hours or pay. Same with jobs that we've had a lot of increase of lately, and that's Uber, Skip the Dishes, DoorDash, those kind of jobs where you kind of set your own hours. Those are hard to, well, they can't use them until you have 2 full years of tax returns built up to show them this is how much you've made in the last 2 years doing Uber and Skip the Dishes and whatever, right? So if you've just started a few months ago, they can't use that because there is no guaranteed pay, and lenders need to see something of a guarantee. Okay. So just keep that in mind when it comes to having a job and income and things like that. So then they take those two and combine it to see what your debts are, how much do you make. And then the final one, which is a big important one, is obviously a down payment, right? So the minimum down payment required to buy a home in Saskatchewan or in Canada is 5% of the purchase price, right? And so just for easy numbers, on a $400,000 property, the minimum down payment needed is $20,000. Okay. If your income and your credit can support going up to $500,000, but your down payment is $20,000, you will be restricted to an approval of around that 400,000, right? Just because your down payment will dictate how much you can be approved for. Obviously, the more you save up for a down payment, the better, and that'll help you out a little bit too. That also works on the flip side. If you're approved for $400,000, but you bring $50,000 for a down payment, that increases your amount that you can essentially buy a home for. The more cash you put down, the more you can afford, right? So that's all things that we can go over together as we do the pre-approvals, okay? But like I said, all those three things have to work together to make an approval work, all right? But sorry, jumping ahead here. With down payments, there's 3 to 4 ways of getting one, all right? So the first one, which is the most common one, is using your own savings, obviously. Number two is a first-time homebuyer program, which is using your RRSPs. So if you have any RRSPs saved up, you're allowed to withdraw up to $35,000 per person to use as a down payment, right? So just we recommend that if you want to use those, reach out to whoever your provider is, let them know that you're wanting to do this, and they'll just let you know if you can do it with your RSPs and what the stipulations are. Usually it's you have to pay a certain amount back year over year within the first 2 years of using it, you do have to start paying it back, right? But there's some regulations with that. They'll let you know what's needed for that. The third way of getting a down payment is what we call the gift from the bank of mom and dad, which is a gift, right? So your immediate family members can gift you the down payment. They just have to sign a letter stating this is a gift for, for John, we're giving you $30,000 for down payment. And it has to come from either mom and dad, grandparents, brother, sister, right? If we start getting into aunts, uncles, cousins, best friend's wife, it doesn't work that way, right? So immediate family members can help with a down payment as a gift, all right? So the nice thing about this is right? It is underwritten. So it's going to be, the underwriters are going to review everything, your income, your credit, your down payment source to make sure it's all okay. Everything's satisfied. There's no issues or anything that comes up from it. But again, these are reliable and it tells us that maximum qualifying amount. That is so important when it comes to buying a home right now. Okay. That's the biggest thing we need to know. And the last little bit of stuff for just this approval part here is that if you're struggling a little bit for pre-approval, which is like maybe your credit isn't quite strong enough, your down payment isn't quite there, or the income isn't quite there, you can use a co-signer. So same thing as the gift, you can use an immediate family member to co-sign to help you out get the mortgage, right? So again, mom and dad, grandparents, brother, sister, they can help co-sign for you. And they're just committed to being a co-signer on your mortgage as long as you can't be approved on your own, right? So their name's going to be on the title just like yours. But once you decide, or once you can be approved on your own, then you can remove them from the title of your home. That way, when you do go to sell it, you don't have to worry about them being involved in the transaction. And there aren't any extra costs when you purchase the house. The only extra cost comes when you want to remove the co-signer. Then you have to pay a lawyer to remove them off the title. And I think the last time I checked, it's about $700 or $800 roughly to do that. So some people decide they're just going to leave it till they sell the home, but some people decide they're going to get them off anyways just to make it easier. So just a couple, there's so many options out there. So usually if it's a no, or because of this, we try to stretch all options we can to get you a yes. Okay, we'll work as much magic as we can. Ryan's has worked some amazing magic before, so definitely book that call with us. If you're thinking you're close to it or you want to know more about it, book a call with us. We can talk you through it, see what we can do with that. Okay. So I see there's a lot of questions in the chat so far. I am gonna have to pull Ryan away from that because he is going to talk to us about the new to Canada program here. So for anybody who's new to Canada, here's some great information. So I'll let Ryan take it away from here.
Well, thanks so much, Andy. Yeah, great questions, guys. Keep those coming. I mean, there's some absolutely wonderful, unique questions in there. I love kind of going through those. It was great. So thank you to everybody that's had the courage to ask. So there's some absolutely amazing questions in there. One of the big things that we do get asked between Andy and I is really helping out people that are fairly new to Canada. This is a program that has really been pushed forward by the federal government and most of our major lenders here in Canada, and one of our largest growing markets in the housing economy. So, as I mentioned, one of the biggest drivers of the first-time homebuyer market is specifically that new to Canada, people that have recently emigrated into Canada over the last, say, 5 years. Just to give you a little bit about the numbers, there's actually over 1 million people immigrating into Canada each year, and this number continues to grow and rise. What we've actually found is that initially over the last, say, 20 years, people started coming into the major centers, Toronto and Vancouver, thinking that because those were bigger cities, that there was more opportunities there for them to plant their families in, get good jobs, find some housing and grow their families. What they've actually found as they kind of came into Canada is those centers, because they're so large, because there's so many people there, the pricing of housing in those Toronto and Vancouver markets was honestly out of scope for most people that were coming into Canada. So they couldn't even get into housing. So what we're finding is people are coming further and further into the middle of Canada, into say your Albertas and Saskatchewan specifically, to find affordable housing. We have the most affordable housing market in Canada, in Saskatchewan, and the job market is very hot and strong. We have one of the hottest economies in Canada in general. We were actually one of the only economies across Canada here in Saskatchewan that continued to see the housing market grow forward even through COVID from 2019 right through to 2024. So we have not seen a negative impact here in Saskatchewan here that every other province in Canada did go through. So the strength of our economy is really second to none. Now, our mortgage lenders and our government do realize this is a really hot market too, and they realize that bringing new immigration into Saskatchewan, into Canada specifically, but into Saskatchewan as well, is a huge driver of that economy, and they really want to foster that. So they've developed programs that are actually labeled New to Canada programs. The program really realizes that people are coming into the country and into Saskatchewan every day. They are going to be fairly new to their jobs. They are going to be fairly new to establishing Canadian credit. So there are some loopholes, some things that we can do away from traditional credit, that we can use to really help grow and show the lenders that just because you are new to Canada, that you are still a good risk profile for a mortgage. Okay. Now, as Andy mentioned, there are really three pillars that are super important when you're getting a mortgage. Number one, of course, being that credit. Number two, being the income. And number three, being that down payment. So we're kind of going to talk a little bit about those three pillars as we go through the New to Canada program specifically here. So the typical New to Canada, I'm just going to get you to bump up one slide there, Andy, if you don't mind. So there we go. The typical new to Canada borrower will have emigrated into Canada within the last 5 years. Now, really, that's a benchmark that the government of Canada has kind of set. What they feel is that if you've been in Canada for 5 years, you've had adequate resources to establish yourself, get a job, establish yourself in that job, establish Canadian credit, and you're likely going to qualify as a normal applicant. You aren't going to need that new to Canada program. But people typically that are under that 5 year mark may not have a lot of credit established. They may not have a lot of job stability. They may have come here, stayed with family for a year or two, and then went out into the workforce. So they may be fairly new into their job, fairly new to credit, and are working on their down payment. So that's really kind of where that New to Canada program is going to find its biggest niche. Okay. Now, typically, the applicant does have to be on a permanent residency status when you're coming into the country, or be here on a valid work permit. Okay, so those are the two scenarios that we can entertain. Unfortunately, people that are here on a student visa, a student permit, don't qualify to get mortgages underneath the New to Canada program. So you do have to be on a PR status, permanent residency, or have a valid work permit with a minimum of 183 days left on it. Okay, so those are two really important things to know underneath the New to Canada program. Now, when looking at income and employment for a new to Canada borrower, their income is looked at just like any other borrower in Canada, except that they want to know that you have established yourself at least 3 months into a full-time employment. Okay, so when you come here, if you just started your job, we do need that first 3 months to show there's some stability in your income. It does have to be full-time as well. So if you're working casually, if you're working something that's maybe on a casual hours or low hours, things like that, they do want to see some strength in that income. They do want to see full-time, or typically about 30 hours a week minimum, that are guaranteed to be able to consider that employment to be able to use for qualification for the mortgage. Now, the one exception to that, I guess, would be if you were transferred, if you were working, say, for a major firm in another country and you were transferred to Canada with that same company, that 3 months would obviously not apply because you were still with the same company going forward, and they would be okay with that. One key highlight here as well is that applicants must be paying income tax in Canada to qualify. Oh, sorry, I'm just going to get you to back up half a sec there, Andy. You do have to be paying Canadian income tax to qualify. So you're going to have to be at a job where they do have taxes taken off of the source. Usually your EI, your CBP, and your federal income tax are taken off. Or if you're self-employed, you do have to have at least 2 years worth of self-employment that you have filed your self-employment with the Canadian government through your Canadian income taxes to be able to qualify that income. But you do have to be paying your taxes and filing your taxes in Canada to qualify for a mortgage. A couple of things to watch out for on the income side. Please really watch out for types of employments that are on expiring job contracts. So if you've come in and you've got, say, a 6 month or a 1 year job contract, but that contract is going to end after the 6 months or 12 months, unfortunately, the lenders and the banks want to see stability, long-term stability with that job. So if you are coming and you're only on an expiring contract, they want to see at least a 2 year history of you working that job or that type of a job before they will consider the income. So watch out for expiring contracts. And the other one, as I mentioned, people that are self-employed. So if you have come into Canada and you're starting up your own business, you do have to file at least 2 full years of your business with your income tax. So you do have to have your business running at least 2 years, and you have to file 2 full years of income taxes to be able to use that income to qualify. Okay, so that's one really couple of really important distinctions to know with income specific. One of the questions we do get asked a ton is what happens if I come over and my spouse is still overseas? Can I use my spouse's income from our country of residence to help me qualify for the mortgage? Unfortunately, the answer to that is no. We would be able to use your income here in Canada, but if your spouse is still working overseas, taxed overseas, unfortunately, there's really no way to track that as far as a lender is concerned in Canada. So any overseas income from a spouse, unfortunately, would not be able to be used to qualify the income going forward for your mortgage. Okay. I'll get Andy to bump the slide over. Our next pillar, of course, is that credit requirements. Door number 2, really, really important here. But for credit requirements, as mentioned, the New to Canada program does take into account the fact that most borrowers coming into the country fairly new don't have any credit established or have very little. Now, typically what happens is when you come over, you are immediately hooked up. If you're working with an immigration officer or something like that, they get you hooked up. You're typically going to get a bank account set up with one of our big banks here in Canada, and they're going to try and get you a credit card right away to establish that credit rate going. But it is going to be fairly new, especially if you're here kind of in that 6 months to a year range. Now, that New to Canada program really does take into effect the fact that they realize that you're not going to have a lot of credit, and they give us other options to be able to say, you know what, our borrower is a great risk. Just because they've only been in Canada for 12 months, there are other ways that we can look at establishing credit other than what shows up as a credit card on the credit bureau. For example, if you've immigrated to Canada in the last 12 months, what we typically need is a minimum of a 10% down payment. In some cases, that might even be as low as 5 if we can establish a really good credit pattern. What's used for credit strength in these cases is they look at your bank statements. So they'll actually go and say, send me 6 months or 12 months of your bank statements. If we can have a look and see that through your bank statements on your primary account, that there's no missed payments, there's no return payments, there's no NSF payments or non-sufficient funds payments is what that means, and that everything has been well handled. You can see the pay coming in, you can see all the bills going out, and there's a nice flow to the mortgage with, or a nice flow to the bank statements without any delinquency. We can use that for credit establishment. They're going to look through your bank statements and go, yeah, they have handled everything that's come in and out of their bank account very, very well. We can use that as credit support. Okay. Once you've been in Canada for over 12 months, typically you fall into that normal borrower category and you can go right down to that 5% traditional down payment. Again, we have options. If you've got, we can use things like if you've rented an apartment or rented a house from somebody for 12 months, we can use that rental payment history as credit support. We can use things like power bills and your SGI plates and your SAS power bills and your Straw cable bills and your SAS telephone bills. Those can all be used as long as you've made all the payments on those for 12 months. Those can also be used as alternative sources of credit to help that credit support going forward. So it doesn't always have to be a credit card or a line of credit on the credit bureau. There's lots of things that we can use to support that credit and show that you are a good credit risk, even though you may only have a $500 visa that you've had for 6 months. There are other ways that we can look at and show that you are still a good credit risk. Okay. Now, the last pillar that I wanted to go talk about a little bit here is the down payment side. And this is super important. This is one that I typically find this is typically the area where most clients aren't fully prepared. So if they haven't brought funds over from their country of origin and they're going to save, I think most people maybe underestimate how quickly it's going to take them to get that down payment. Now, just to give you an idea of what we would typically look for, so I'll use kind of the average house price of 400,000. So 5% of a $400,000 purchase price is $20,000. Now, what we need to show the bank is not only that 5% down payment, so that 20,000, we also need to show that they have the ability to pay the lawyer and register the mortgage on title. It's called closing costs. Now, the cost that we typically have to pay to the lawyer is about 1.5% of the total purchase price of the home. Now, what that really equates to is that we need to show about $26,000 that you have saved to the bank and that you've got that's saved for your 3 months. So don't underestimate how long it's going to take you. If you have resources that you can bring over from your country of origin, do that right away. If you have ability to borrow that from family, and we'll talk about that in a minute, do that right away. Okay. But don't underestimate how long it's going to take you. Really get those funds moving immediately. Now, I do want to talk a little bit about a couple of those that I did touch on quickly. Number one being the gift. Andy called it the bank of mom and dad. We kind of refer to that as with a smile on our face, but absolutely that is what it is for. This is money that is coming from an immediate family member, so it does have to be an immediate family member. So that is a father, mother, grandparent, or child. So it does have to be an immediate family. You can't get it from Uncle Joe. It does have to come from an immediate family member. But if you have the ability to get a family gift from an immediate family member, that can also be used to qualify your down payment. Okay, so if you have somebody that's going to gift you that $20,000 from mom and dad, we can absolutely use that as well. That is an option for you. Now, the other thing that I wanted to mention is when they look at down payment, they do look at a 90-day, so 3 months track record of those saved funds in your account. So what we typically run into with people that are moving money maybe from out of country into Canada is they wait until the last minute to start that process bringing funds over. What we're going to tell you is do that right away. We want to have those funds in Canada for 3 months or longer because they do look at that full 3 month track record. They do want to know that those funds are fully tracked and have been brought in early. So I know that some of you come from countries that it can be a little tougher to get funds out of your country and into your Canadian bank account. So don't wait till now to start the process and moving those funds. Do it right away. If you're on this webinar and you're looking at getting a mortgage, in the next couple of months, go and get those funds moved into your Canadian account immediately. The longer they can sit there, the easier it is to track. Don't use multiple accounts. Make sure you use one savings account so it's easy for the bank to see your 3 month track record of those funds in that account. Big thing. Get those funds moving, get them into your Canadian account right away. It really makes it easier on our side if we're not tracking 8 different accounts and tracking them back to your country of origin. If we can look at those 3 months of savings in your Canadian account, really makes it nice and simple to get your down payment approved. So that's kind of the New to Canada program in a nutshell. Of course, each situation, again, as I mentioned, very, very unique. I deal with New to Canada clients all the time. Every situation is very unique. I've been doing this for over 20 years. I've dealt with the program for over 20 years. I love to help out, and there are many things that we can do. Give us that call, click on the booking link. Even though you think you may not qualify yet, I'll bet you there are some things that we can do to help at least get the ball rolling and the process started. If there are some things that we need to work on, at least we can have a look at those up front and get you put on the right path and get those stepping stones put into place to get that mortgage sooner than you think. We look forward to helping all those New to Canada clients. And I'm going to flip it back to Andy to finish off the rest of the webinar. Keep those questions coming in the chat box, guys. I'm looking forward to it.
Awesome. Thanks, Ryan. Yeah, lots of questions in the chat here. I did what I could, but I know you got a lot more knowledge on the finance side of things here. There is a question. It was a direct message to me, Ryan. I won't get into specifics on it, but we'll ask it at the very end here. But it's something more that we should go over. But I'll run through. We got about 20 minutes left, and we'll go over that.
Perfect.
But yeah. So then the last and final bit of the finance side of things before we get into a little bit of the real estate side of things is the mistake of using your bank. And again, when I mentioned this at the start, is we're here to save you money. Okay. And I'm going to show you some ways on why it is beneficial to not use a traditional bank when it comes to getting a mortgage, right? Banks are fine. There's RBC, BMO, Scotiabank, right? They're all fine, has checking savings accounts, has, different savings accounts like that too, right? And we all use them. My dad is a general manager of a credit union, right? So again, nothing against banks. It's just when it comes to getting a mortgage, using a mortgage broker, using Ryan will save you money. And here's why. And more than just money, it'll save you headaches, issues, and so much. I'll show you here. So the difference between a mortgage broker like Ryan and a bank here. So Ryan has access to over 30 different lenders' products, right? He's going to shop around. He's going to find you the best product with a really good rate. Okay. Where the bank, they're going to be restricted to their in-house product. Like I said, RBC, Scotiabank, BMO, they all have their in-house product, right? That's what they're going to sell you. Ryan works the same hours as me as a realtor. Real estate is an after hours business, right? People are shopping for houses after they're done work, on evenings, on weekends. And when we're dealing with multiple offers, when we're dealing with a fast-paced real estate market, we need somebody that if we have a question, like if we want to sneak up a little bit, is there room to do that? Or if we're looking for a condo with condo fees, can we make this work? 9 times or 9.9 times out of 10, Ryan gets back to me as soon as possible, lets us know, and we can make those decisions. If we need something like that with somebody that works in a bank, banks are closed at whatever, 6 o'clock. Shut down, done. We're not getting an answer till the next day at best. And by that time, we may have somebody else would have won the offer on the property. Okay. So it's big advantage that way. Like I said, Ryan is going to offer his best mortgage rate up front. All right. Whatever the best program with the best rate is, you're going to get it. Banks will offer their bank posted rates, which are typically a little bit higher. And again, it may not seem like much, like, 0.1% of an interest rate. Well, that's nothing. But even if it's saving you, $50 a month, that's what, $600 a year, right? Okay, not much, but over 10 years, that's $6,000, right? So when you go to sell your property, I want you to have $6,000 extra to either put in your pocket to help you out or to add to your next down payment, not just go away because of a simple little, interest rate difference, right? It's going to save you money, and that's huge. All right. Ryan, again, works for you, not the lenders, not the banks. He is there for you. Where the banks, again, they are personal mortgage brokers in there. They do work for you, but they still have an employer. That's the bank. Again, Ryan doesn't have that. He's going to work for you. And again, you can call or text him anytime with any questions. Again, 2 a.m. may not be the best time to call us, but, we're going to answer, after work hours to help you guys out. Again, the banks, once they're closed, they're done. Good luck getting a hold of them. And so another little thing about this is it's always, every business, you have your good businesses and your bad businesses, right? Now, I've worked with Ryan for years. He is fantastic. not every mortgage broker is as fantastic as Ryan. Again, it may sound like a cheap plug for Ryan, but it's true. Earlier, I guess this year, late last year, early this year, we had a buyer we were dealing with. He was a referral from another first-time buyer. They sent him our way. We helped him out. He was referred a mortgage broker out in Ontario. So they worked predominantly in Toronto. People in Toronto, especially when it comes to mortgage brokers, have no idea about Saskatchewan and their ways of doing things and their, most of the time they don't even know where Saskatoon is, right? Not saying all of them, but some don't, right? And so we had a mortgage broker out in Toronto. They were helping him try to find a place. We searched for a ton of houses, ton of places. We offered and got accepted offers on 3 different properties. But each property, that mortgage broker in Toronto wrecked the deals because they didn't know what was going on. They denied him his financing, 3 different properties. So finally, after the third one, I said, look, I've been asking you to talk with Ryan. This is now time for Ryan to get involved because we're not losing a fourth property for this. He got a hold of Ryan. Ryan talked to him, had him pre-approved the next day. We went and we found a place and we slam dunked it. They got into it, no issues whatsoever. So it's not just the banks. It also becomes the fact of who's a really good mortgage broker. Again, I work with Ryan. He's never let me down. He's been solid. We've talked every day, right? This is where it's going to save you money, save you headaches. You're not going to lose on the property you love because of a simple error from somebody in Toronto, right? Again, this is why it's going to be beneficial. And the last and final thing on banks and the financing is when you decide to sell your property. So mortgages are 25 to 30-year terms, right? Now, things change in 25 to 30 years, right? New job, families growing, or maybe you're downsizing, or you're moving out of the province or country and you need to sell before you pay off the home. That's what's called breaking your mortgage. It's not bad. People do it all the time. I've done it. Everybody's done it, right? Most people don't live in their first house forever, right? So when you want to change and sell and upgrade or whatever, there may be payout penalties because you're breaking your mortgage. So Ryan can get you little to no payout penalties. Now, we can't guarantee there is no payout penalties, but they're going to at least show you what it is. Banks can have higher payout penalties. Okay. So just watch for that. Again, saving you money. That's what we're here for. Right. So I see that the chat is still lighting up. It's a great thing. Keep the questions coming. But that's it on the finance things we have for you guys. We have I'm running a little bit ahead of time or over time here. So I'm going to start going through some real estate stuff. We'll try to wrap this up by 8, maybe just after 8 here, get you guys out of here. But that covers the financing side. Again, book a call with us if you want to continue on with this with financing or any questions you have. Book that link or click that link, book with us. We'll be happy to help you, show you some options. Okay, couple things from the real estate side of things. So usually first-time buyers typically don't go for brand new builds. Okay, they're a little bit more expensive. You don't get everything out of it. But traditionally, a new build comes with the main floor and an upstairs, and the basement's open for development. There may not be a garage that needs to be added on after the fact. They may not come with appliances, right? They're usually bare bones, and you got to put in the landscaping and work. So most first-time buyers go for resale properties. But again, because of low inventory, people have been looking more into new builds. So I'm going to touch a little bit on it. First thing first, there is you're not saving any money buying directly from a builder. Okay, they have their purchase price set. They know that realtors sell a lot of their stuff. Everything's all built into the purchase price, and typically new builds do not touch purchase price. Okay, because they have the cost built out, especially if a builder is building a whole block of houses. If the first house we negotiate 5,000 off, then the next house now is valued 5,000 less, but somebody may negotiate 5,000 more off of that, right? And it just keeps a domino effect all the way down. So maybe the first house was 450, but the last house on the block is now closer to 400. That really affects their value. So they stand firm on their purchase price, but things that I can negotiate in for you is add-ons, upgrades, right? If there's appliances you want in there, we can try and add some appliances in there. They may not give you the full price, but they may knock, a couple grand off of it to help you out. Or they can add different upgrades of doors or handles or, if you want a deck built on the back, right? I've always tried to put something in for you guys to help add on to to an effect. Okay, so that's what we're there to do, but we're also there to help you with the knowledge of buying a new build, right? Going to that one builder, they're going to sell you their product, and they may have good product, but there's also builders over here or builders over here that have different products that may fit you better, maybe with a different or better price. Maybe they have different add-ons that we can put in that you like, and show you a bunch of different options. And also, you have somebody that's going to work with you to make sure what you're signing, the contracts you're signing, protects you and not just fully for the builders, right? We want to make sure that if the cost of material rises, they're not going to throw that on your purchase price. Okay, it's not going to reflect on you. Also, if there's an issue after you move in and there's some issues that you got to deal with the builder, you want somebody that's going to work for you on your side against the builder instead of you going to try and fight against the builder on your own. Okay, you want somebody in your corner, and I can show you every single new build that's out there, take you to a bunch of different show homes, show you different layouts and plans and things that we can add on for you. Okay, so that's what is so important about these. Again, I don't touch a whole lot on new builds, just because every builder has different products and programs, right? So we can kind of take that as it comes, depending on what you want to look at. Okay, but we're going to jump into more resale side of things. So this is a very, very important part of buying a home, is a home inspection. There's so much that's in a home that's hard to miss that we want to protect you on. Okay, so I'm going to take a minute here on just to throw it out here. I know there's a lot of people keep asking the questions in the chat, but to make sure everybody's still with me and still tuning in here, can anybody tell me, just throw numbers out here, I just want to see if we're close, how much you guys think a home inspection costs for a simple detached home here in Saskatoon? Let's go ahead and throw some numbers out. Oh man, we got some good. Yeah, we're close. I love it. Yep. So wow, 500. Yeah, good. So yeah, so 500 is close to it. The guys that I recommend who are fantastic with first-time buyers are a little bit under 500. They're about 475. Okay, that's the going rate for a typical detached house in Saskatoon with a garage, things like that. If there's a basement suite, it goes a little bit higher, I think by maybe like $50 because there's a whole suite they have to check extra. But anything below that, like if it's a townhouse or an apartment kind of condo, it goes cheaper than that because there's less things to check. But it's about 475. And I had people say, well, that's a little bit, it's a little bit pricey, which I mean, it could be, but you're paying for a $400,000 house. You want to make sure everything about the house is sound and there's nothing that's missed. Okay, so when we do walkthroughs of a house, that's what I talk about. You guys will be looking at what the layout looks like. Is it going to fit you guys? Do you guys like the colors and all the appliances and things like that? In the background, I'm looking for, is there any moisture damage? Is there any cracks in the foundation? Are there any underlying issues that I see that you typically wouldn't look for because you're new to it, right? That's what I look for. And that way, if you still like the property, we can point out certain things that when we book a home inspection, say, hey, check this corner of the house. It looked like there may be signs of moisture. Can you check that? Or, things like that. Or keep an eye on the electrical panel for us, right? Make sure that things are good. But these home inspectors, again, the ones that I recommend, they don't miss a thing. They check the house from top to bottom and around and everywhere. And literally they check everything. So the only thing they can't do is home inspectors can't open up walls and be invasive, right? It's a non-invasive inspection, but they do have technology to look for everything. Okay, so you get a massive report on what they find. So on the left there, you see an infrared camera. So he's checking through the walls and the ceiling to make sure that the attic and the walls insulation are good. There's no cold air or anything coming in or signs of moisture. They also have moisture readers to make sure that there's no moisture evidence of it. So that's what they're doing with that. So they check everything. They stick their head up in the attic to make sure the insulation up there is good. No sign of leaks from the roof, things like that. Make sure all the plumbing and vents are all connected properly, which we've had before where vents weren't quite connected properly. And all of a sudden the steam from the bathroom is getting vented into the attic, which is terrible. That creates mold, creates frost freeze up in the winter, right? So they look for that. They check all your electrical. So they make sure your electrical panel is good, no double taps, no overloading of the circuits and the breakers. They make sure every plug in the house functions. And I'm talking every single plug. They check for that to make sure that they're all working and functioning. They check all the lights, everything like that gets checked. They check the plumbing, every single thing to do with plumbing they look for, make sure there's no leaks. So on the bottom corner here, you see his infrared camera is showing the leak. There's a little blue line. It's hard to see, I know, but there's a blue line under the sink. There was water damage and they're from a leaky pipe down there. So it was rectified. They fixed it all for us before you moved in. Okay. Yeah, I see a couple questions on home inspection. I'll jump on here. Inspectors do have errors and omission insurance. So if they do miss something, they do have that in case of it was a major miss, right? Again, my guys have never missed a thing on me. But I've used other home inspectors that were recommended or that my buyers chose themselves that I couldn't verify. And there's some things, some inspectors, again, like I said, some aren't nearly as good as others, right? So that's why I recommend some very, very good ones. And you need the inspection during the condition period. So once you offer on the property and it gets accepted, this is a condition, then you get the home inspection done. Then you pay for it, get it done. If so, a couple things is if the home inspection comes back and there's major issues like mold in the attic we couldn't see, or major issues of water infiltration from the crack in the foundation, things that we couldn't see during the walkthroughs and things like that, you can either walk away from the property and go find a different one, or if it's fixes like electrical or the furnace needs fixing, we can get them to fix it before you move in, or we can negotiate some off the purchase price to make it cheaper for you guys, and you guys can take care of it on your own. So there's a bunch of different things we can do when it comes to home inspection, but it's part of the condition that has to be satisfied by you, the buyer. Okay. Again, they also check the major, we call them the big ticket items. So this is your furnace. They cost anywhere from $5 to $7 to replace. So we want to make sure these things are functioning, especially in these harsh Saskatchewan winters. Make sure your furnace is working, make sure the air conditioner is working. They make sure that the water heater is working properly and the shingles and everything are okay outside on the roof. So they check all that stuff, and they check appliances. So they test every appliance, make sure they're functioning and not leaking and all that. The only thing with appliances now for a home inspection is that they put them, my home inspectors put disclaimers on here. They do test appliances, but they cannot guarantee that they're going to work upon possession day kind of thing, right? Because they are a used appliance. Appliances are finicky. We know, like everything these days isn't built to last, that it could work during the inspection, but maybe a day after you take possession, the dishwasher leaks. And that just happened. Unfortunately, a buyer took it, and it was actually a couple weeks later, the dishwasher sprung a leak. And we looked in the report, and she was trying to blame the inspector that he didn't check it, but it was in the report that it functioned. But at that time, okay, it just happened. So at least they're going to test it at the time. All right. But again, the cost of skipping that $500 home inspection could cost you tens of thousands of dollars, especially if there's a leaky roof, mold, crack in the foundation, right? This stuff all costs a ton of money to fix if it's a major issue, right? So we want to make sure that you know every single thing about your house. And trust me, we're talking like 50 pages worth of inspection notes on your property, okay? They don't miss anything. So that's very important to get. And then, so we've got about 2 minutes left. That's the stuff on the home inspection. Again, I can talk about this forever, but I got to keep moving. This applies to if you buy a condo. Lots of first-time buyers buy condos. They do come with what's called an estoppel. Okay, an estoppel is condo documents of everything about the condo. Again, these can be hundreds of pages long. All right, so this is mandatory when we write an offer to purchase for a condo. Getting a copy of the condo documents is mandatory. They don't have an option. They got to get it to you. They pay for it. They send it to you. Okay, what's not mandatory is getting a lawyer to review it. But in my mind, it should be a mandatory thing to have a lawyer review it. You're paying them to do the transaction. Get them to review this for you. They are qualified in looking into the estoppel to make sure there's no red flags, right? So some of the big things they look for, the main one is the reserve fund. That's how much money the condo has saved up in case of expensive repairs, right? So, big condo units, we want to see like in the $100,000 range, $200,000 range, depending, right? But we want to make sure they have a healthy reserve fund, that they have enough money to fix things in case they break. If they don't have a good enough reserve fund, they do what's called a cash call. So if there's something that's broken, they come to the unit owners and ask them to chip in money. Now that could be a couple $100, could be a couple $1,000, could be tens of thousands of dollars, right? It all depends on what broke on the unit and do they have a reserve fund. This estoppel package will tell you that they have to be audited, they have to be reviewed, they have to do reserve fund studies. I believe it's every 5 years, 4 or 5 years. They have to have these studies done to make sure they're on track. Okay, it'll tell you how much your condo fees are, where parts of the condo fees go, how much goes to reserve fund, how much goes to maintenance funds, things like that. Tells you the bylaws, what you can and can't do with your property. So if it comes to renovations, what you can and can't do for renos. Um, It'll tell you who does the landscaping, who does the snow removal, all this. It tells you everything. So the lawyers will look for any red flags. Have they been audited? Is this condo property management company running this properly? Is there any red flags such as cash calls coming? They will look at that for you. And if they find some issues with it, again, this is a condition where you can decide, I don't want this. I want to walk away from it and go find a different condo. And that's happened before. It's just part of buying a property, right? We need to make sure you're okay with everything about this property. All right. So so again, it can save you a lot of money. I mean, $10,000 is a bit generous, but it could, right? If you do a bunch of renovations, sometimes in those apartment style condos, they may not let you do certain types of flooring, like they may not let you take out the carpet just to keep that sound barrier between the other units. If you decide to reno the entire condo with hardwood or laminate, and it costs you a couple grand to do that, and they find out about it, they can fine you, make you rip it out and redo it. So it costs you another bunch of money to do more renos. Okay. So it saves you from that issue, or it saves you again from cash calls. In case there's cash calls coming, it can save you from that to make sure that you're protected. Okay. That's the big thing that we want to take away from all this. We're here to save you money. I know buying a house isn't the cheapest thing, obviously, in the world, but if we can save you guys money during this whole process and buy you a sound investment, that's what we're here for. We're not just here to put you in a house just to say, hey, here's a home, buy this home. We want to find you the right home, not just anyone, right? If I see one that's a $400,000 house and we walk in there and it's full of issues, I'll say we either, we're definitely not buying it for this price, or we should find something better because there's better options out there. Okay. We're not in the business of just putting people into anything. It has to be something that you're satisfied with. So yes, this meeting is recorded. We are recording right now. It'll be sent out in the next, the recording link will be sent out either tomorrow or Friday at the latest. All right. So everybody will get a copy of this. But yeah, that kind of covers everything now. I know it was a lot. I'm sorry for the hour of just a bunch of stuff spewing out, and we try to make this as helpful as we can without, missing a lot of important things, right? So hopefully this was good. Hopefully we kind of helped you guys a little bit out with all of this, alleviated some stresses. Book that call with us if you guys are wanting to move forward or talk more. I'm always happy to help. Ryan's always happy to help answer questions on all this. So I'm kind of going to pass it off to, oh, sorry, I should go over one more thing too, before we get into the Q&A part here. This is what it looks like when you click that booking link. It brings up a calendar and it'll have available dates and times. Find a date and time that works for you. I'm happy to talk, whether you're ready to buy now, buy in 6 months, a year, whatever. If you're even out for a year, we want to make sure you're on the right track, that when you are ready to do this, you're set. You have all the things in place. Nothing's going to pop up that's like, oh, well, now we don't have that. We got to wait again. We want to make sure you're ready to rock with all the right information. Okay. But I have been talking for a while. I'm going to let Ryan kind of jump in here again, and we can kind of both tackle some questions here, see what we missed. I see that this was booming. This was a good chat box, it looked like. Hey, Ryan?
I was just gonna say I'm about two questions behind because there's been so many fantastic questions coming in. I'll just kind of pick them up as where we are. So hopefully these people are still on the webinar tonight. Great question from Michael and Nancy. What about insurance for new builds with shifting, settling, and cracked foundations? That's a great question. It's actually called Builder New and Warranty. There's a few different providers. There's Progressive, a few other ones that builders use. And they do have to be, for most lenders and mortgage insurers like CMHC, they do have to have builders that are part of a new home warranty program. So that's to your benefit, right? So they don't want somebody that's going to build your house that doesn't have that warranty behind it. So they do have to be part of a new home warranty program. Typically, the insurance on new home warranty, what it covers, usually your first 12 months, there's a certain amount of stuff that they'll fix right away. Each one is slightly different, but there is anything really on the board is can be fixed within 12 months. Some stuff like the foundation stuff might be a little bit longer. I'm not fully versed on exactly what the timelines are on cracked foundations, stuff like that. But when you do talk with a builder, they will let you know who their home warranty provider is, and they will provide you a full breakdown as to what the coverage does entail. So making sure that if you are talking to a builder specifically, or you're dealing, if you're dealing with a builder, deal through Andy. Big thing on that is if you deal with a builder directly, the builder's always going to be working for their benefit, right? They're going to try to get you to buy as high as they can because they're working for the builder. You always want to make sure that you have your own independent realtor working on your side. So engage Andy. Andy can always help you with a builder as well. Typically, he will either get that price negotiated down slightly. That doesn't always happen with a new build, but what he can do is get a bunch of things thrown in, maybe a driveway, maybe additional things on the property, decks, fences, things like that to help negotiate the property, the offer going through a builder as well, and he can really help facilitate and work on your benefit. And again, remember the cost to use on the builder side. All the fees that come out on a realtor are paid on the seller side, so it doesn't cost you anything extra to use Andy to help dealing with a builder. But check with your builder specifically on which new home warranty provider they do use and what the specs are around that. But absolutely, there is new home warranty coverage on all your new builds.
Yeah, there's with
Next question here from
foundations, they can typically sometimes they have a 10-year warranty on foundations. It
yeah.
depends on the new build, right? But they're
Yeah, it really does. It depends on the coverage of which provider they use. But yeah, I mean, think major things like foundations typically have a longer timeline than just your basic 12 months.
yeah.
What do we got here? Question from Fred: Can we have a second time inspection if we are not satisfied with the first one? Yeah, you can get as many home inspections as you like. Typically, remember that there is a cost to keep doing those. The home inspectors are there for your benefit, guys. Like they're not there to assist the home seller or even us. They're there to really help you walk through every part of that home and decide, if it's a little nick in the countertop that you can live with, or is it a major, foundation crack that you might not have seen, that you may walk away from that home if it's something really major. But they're there to give you all the information on the home to help you make the best decision on whether you want to move forward or not. The information that comes out of that inspection might be something as simple as a toilet that needs to be replaced or something like that. Sometimes what that can also help you do is negotiate the price down if there are a few items in there, and that's where Andy can really work with that information to say, hey, there's about $10,000 worth of work here. Why don't we go back to the seller and see if we can negotiate that price down? So that can help, but it can also help you if it's something really, really major wrong with the property. You may want to consider walking away, and that's where that information is really going to be beneficial. The last thing we want to do is have you get into a home that's got a major crack in the foundation and you have foundational issues that could cost you 40 or $50,000, right? So that inspector is really going to help you with all the information to make the proper decision on how you want to move forward with that home sale.
Yeah, I want to touch on the home. There's a few questions on home inspections here, so I kind of want to just throw kind of all in a bunch here. Um, okay, so yeah, so if they do miss something, they are covered in errors and omissions, much like we are. But again, the guys that I recommend, I've worked with a lot of home inspectors. I have a select few that I really, really like to work with. They don't miss anything and they check everything. If they do find something, like I mentioned before, if it's, and as Ryan mentioned, if we want to walk away from it, absolutely. But if it's something that's simple and fixable, right? Like, if there's a furnace isn't working properly, right? We can just say, hey, can you guys get a furnace guy in there, fix it, show us proof that it's fixed, and show us the receipt that it was done from a professional, right? Or if, maybe it's a water heater that went, you can either say you guys replace it, or we're going to knock off 2 grand off the purchase price because that's what the cost of potentially a new water heater is going to be, right? So we're going to knock that off and we'll just get our own people to fix it. That way we know that it's done by people we trust and that we know it's done right while we live in there, right? It's a couple different ways. It depends on how you feel about it. We can get the sellers to fix things if they agree to it, right? That's still the other factor of this, is that if we get them to say, we want you to fix a couple things here, the sellers still have to agree to it. So if the sellers don't agree to it, that's just more incentive for you to be like, okay, well, fine, we'll walk away then. But they can fix it. But sometimes I've had buyers that say, you know what, tell them just to leave it. We'll just knock off a bit off the purchase price to cover that, and we'll get our own people to come in. That way we know it's done properly, right? That's typically how we kind of work with things, right? Depends on the fix and what's wrong with it and how the rest of the house looks, right? I know we've looked at a few houses, we bought a few houses that you can tell the person that lived there did a lot of do-it-yourself kind of fixes. And so sometimes like, you know what, just don't fix it because we know you're going to try and do it yourself, and we just want a professional to do this, right? So this just all depends on the each property, right? But yeah, that's just a little bit about the home inspection. I think that's covered. Hopefully that covered what uh yeah, so if there's findings during the inspection, can this be a result of reprice of property? Yeah, it depends. If you kind of reprice it based on how much the fix would be, right? If it's a $500 fix, well, we can negotiate maybe $500 to $1,000 off, right? 500 to 1,000 off, right? It depends on each fix and each issue. But a lot of sellers have been very responsive to fixing things for the buyers once they find out about it. Because sometimes they simply don't know. That's what home inspections are good for. So, but yeah, what else? What else did I miss here? Let's just see here. Okay. See here, I'm going by, what did I miss here?
We got a question on market, Andy. Did you
Oh,
want to
yeah.
touch a little bit? MA has asked us if we can touch on the current market a little bit in Saskatoon specifically. It always makes me anxious when I see houses getting sold in one day. That
Yeah.
that that really brings up a great point. Thank you, MA, for that question. It is absolutely something we're going through. I'll let Andy touch on that a little bit, and really how we navigate that type of environment to put you in the best position, that when you do find that great home, that you're in the best position to buy. So I'll let Andy touch on that a little bit.
Yeah, it's chaotic to say the least. I mean, that's the best way to put it. And I don't want to put a damper on things. It is chaotic. Um, but basically what the best thing that I've done lately is I want to stress a lot is communication. Okay, communication is huge, especially in this market. So typically how we start this out is that you get the pre-approval. I'm going to use 400 as an example. We figure out what you want in that range, right? How many bedrooms, bathrooms, what specifics do you want, don't want, right? We get as much information as we can. We start the search, and I have it set on my search that it does not include conditionally sold properties. So anything that gets sent to you the minute it comes on the market is available, right? If you don't see it, it's a good chance it's already conditionally sold. So the reason we do that, and the reason I say communication is huge, is because if you change anything on your search, you have to let me know, right? If you tell me, oh, well, we were able to get more of a down payment from mom and dad, so now we can up our purchase price. I need to know that to adjust it so that we're not missing properties. Because if we miss one and it's a day or two later, there is a good chance it's gone. So once that property comes up, it hits your inbox and it says, here's this, and you love it, you just send me a message, and we figure out the right time, and I do as fast as I can to get us in there as quick as we can to get a look at it and make that decision. But it is chaotic. It's fast paced, but it's definitely doable. It may take a couple times to get it right. I've had people that were able to buy sometimes the first house they find. Sometimes it takes a couple properties. Sometimes it takes a couple offers to get properties because we see these multiple offers. Sometimes we'll offer a really good offer, but somebody comes in with an extra couple grand and they end up winning that, right? So it's kind of and the hard part with offering on these properties is that if there is multiple offers, we don't know what anybody else offers. So we're kind of just going into this a little bit blind, but we kind of do what we can, and it's still workable. It's still, it's still plausible to do this. It just takes a little bit of fine tuning. So don't get discouraged when they're coming up. There's always properties coming on the market every day. So they come up, they go down, they come up, they go down, and there's always going to be something. We just got to get the right place at the right time. All right. So hopefully that helps a little bit, but as long as we've got, everybody on the same page here, we've got that pre-approval in place. We know how much we can hit that mark with. We're good to go. And I've got some tricks and stuff when it comes to writing offers that help kind of entice a little bit more different dates and things like that help out to make your offer stand out a bit more. So that's kind of things that we help with there. What else? Oh, there was one question I wanted to ask Ryan. This was a private message to me. Again, not getting into details. This is more for financing. They asked, so let's say they work overseas, they get paid in Canadian funds over here, but they want to know if they're able to use it to buy a home here, if they're still working across seas, maybe remotely or something like that, right? So I know we talked a lot about what happens when you're working overseas, across seas, getting paid in different funds, and it'd just be nice to kind of go over what exactly is needed for that.
Yeah, so that's a great question. I mean, really, overseas income is really a bit of a unique situation. It really depends on a couple of things. Are you working for a Canadian company? Are you working for a foreign company that they're paying you in Canadian funds? How long have you been working for the company? Do you file Canadian taxes on those funds, or where are those taxes filed? So there's a lot of factors that really kind of come into play. What we typically look for on anything that is a foreign income is that you have to have been doing it for at least 2 years, and you have to have filed 2 years worth of Canadian taxes on those funds to be able to use it. Now, having said that, I mean, if you are working for a Canadian company, you're paid in Canadian funds, you're living in Canada, and they maybe ship you out to work somewhere, and then you come home, but you're paid in Canadian funds with a Canadian company, and all your taxes are taken off on a Canadian source. We would likely use that income, right? It's a Canadian company, you're paid in Canadian funds, taxes are taken off at the source. You would be considered a full-time employee with that employer. We would probably just use that full-time employment. Now, what we do see is Canadians that are working abroad, maybe working for a foreign entity, a foreign company, and even though they're paid in Canadian funds, they're working for a foreign company. Now, that's when we do need that 2 year history. We need some stability because we can't really have a lender go out and check employment verification with a company that's maybe in a foreign country across the globe, right? We can't expect them to do that. So what's going to happen is then they kind of fall back to, have they filed their Canadian tax records for 2 years on that income, and we would use a 2 year history of the taxes filed on that income, and qualify the income that way. So it can be done given those parameters, but you know what? Each situation is different. So if you want a little bit further information on it, just let us know. Let's talk one-on-one, and we can have a good conversation about what your unique situation might be and find the best ways to navigate around that. Yeah, great question.
What else we got here?
Yeah, I see you jumped in and took a few of these questions. Great, Andy. I know that we did have one question specifically on bidding for a property. I know you kind of covered it a touch. It's from Taya. Um, really, realistically, I mean, the market is very hot. It's very there are a lot of bidding wars happening right now. I know that you did touch on it, Andy. Did you want to maybe just kind of go over a quick blurb just for Taya who might have missed that?
Yep, yep, that's a good question because now I kind of want to get into a little bit extra on offering on a property. Okay, so when we come into this low inventory market now, what we ran into for the last few years now is that sometimes when a property is like a move-in ready, hot property, they'll list it and then they'll just get flooded with showing requests. So I've had some before that they were booked solid from half hour showings from 8 a.m. all the way up till like 8 p.m. So 12 hours of half hour. So that's 24 people looking at this property in the minute it comes on the market. Okay, so imagine how many of those people are writing offers, and it's just chaos. It's first come, first serve, and it overwhelms the seller. So what they've come out with is what we call a presentation of offers. Okay, what this means, and you'll hear it quite a bit when it comes time to buy a home, depending on when you decide to buy, if maybe the market has shifted by then. But right now, we're looking at what's called presentation of offers. So, in a property that the sellers determine that it's going to be a hot property, they do this. So, let's say they list it on, I'm just going to use Thursday. We're going to list this property on Thursday, and we're not going to accept or look at any or respond to any offers until Monday at 7 p.m. Okay, so they're going to give everybody from Thursday, Friday, Saturday, Sunday, all weekend to look at this property, that just because it gives all the buyers time to get into it. It gives the people a chance on the weekend. That way they're not just trying to get in at one time, right? So they let people look over the weekend, and then what happens is you have to submit what we call your best offer by 8 p.m. whatever day they set, right? And so that means that we talk about what we saw in the house, what you want to offer, and a lot of times it may have to be over asking price, right? Depends on how many people are offering on it. Usually we're able to know a rough number, whether it's 5 different people, 5 to 10 different people that are offering on it. So we have to make a judgment call on that. That is always going to be a hard one because I've had pretty much every buyer that I ran into when we're doing this will ask me the same question. What is a good offer? I simply can't answer that because there's 5 to 10 other people. So I know we're going to have to go a little bit higher, right? How higher? I don't know. I don't know what the other people are offering. It now comes down to what are you comfortable with? How much do you want this house? And how much are you willing to be like, okay, this is my max. If it goes, it goes. If we get it, great. That's where we have to decide, is that worth it to you or not, right? And if, and just shoot your shot. Sometimes we've had it where it was a couple grand over asking. Sometimes it was about 10 or 12 over asking price. And I've lost on houses that were, what was the biggest one I had? I think it was 60 grand over asking price. And we only offered 8 over asking price, right? So there's always going to be somebody that wants it bad enough. So don't get discouraged. If we always see a house that says presentation of offers, don't get discouraged. It's just actually helpful to get a look at the house in a more relaxed, calm manner. But we just got to determine how much we're going to offer on that, right? And again, not every house is like that. As we get into the winter months, less activity, so we may see less of that, right? And then we get more negotiating power, but that's kind of how it works. We submit an offer based on what you're comfortable with. Obviously, if I see a house that's been on the market for, a couple of days to a week, obviously they're not getting offers on it. That must mean they're overpriced or something's wrong with the house or a combination of the two. We'll go check it out and have a look. If it's a sound house and there's no issues, it's just because it's overpriced, and we'll just negotiate a lower price point at that point, right? So it's still possible in this market. Don't worry, there is always opportunity for that still. Okay, but this is kind of how it works with bidding. It's blind. You don't know what everybody else is bidding. You don't know what their conditions are, but we do our best to make it as enticing to the sellers as possible, right? So hopefully that answers a bit of that. What else do we miss here? Okay, there's a good one there. This is back on the home inspection one I see. Yeah. If there's issues with them, I see Ryan just message it there. Yeah. For sure, if they do find issues and we get a quote for repair, we can negotiate that down. If they don't agree with it, then they don't agree with it, and that's kind of back onto your court then, right? Let's say, okay, well, the quote here came in at, $2,000 to fix this. Well, let's knock 2,000 off that purchase price, and they say, no, we're only going to knock 1,000 off or whatever. Or they'll say, no, we're not even worrying about that. You want it, take the house. And that's where it comes down to you. Either you agree and just say, okay, whatever, we'll deal with it, accept what they wanted, or you can still walk away if you want to say, fine, if you're not going to fix it, we'll walk away kind of thing, right? But again, if it's not a huge fix, right, there's always room for negotiations. But again, it's still up to you. You have to be satisfied in order to keep purchasing a property, right? That's it. There's a lot of things in the buyer contracts, the purchase contracts, that do protect the buyer. Okay, and you'll see that when you do go to write an offer. All right. And that's what we're here for. Uh, we
Great
don't,
question
this is
from
actually, oh, sorry. Yeah, go ahead.
sorry, go ahead, Andy. I was just going to say, you know, honestly, MA, each situation with each different client, different friend that we're helping out is very unique. So to tailor a specialized presentation, um, for every there situations out there, we could do hundreds of them, to be honest. So we do kind of start high level with these presentations and really give you a good broad spectrum of how the process is going to go. And then it's really about having a one-on-one conversation with you directly to find out what your specific needs and wants are in the home buying process and what the needs are on the mortgage side to make sure that we tailor that mortgage and that home buying process specifically for what you need. So after we kind of do this general, overall presentation, then we really kind of get down and sit down and talk to you one-on-one on both the real estate and the mortgage side and making sure that we fine tune the process to meet your specific needs. So we don't do a lot of specialized stuff because it really may not tailor the presentation to everybody in the presentation. So once we kind of do get down to that specialized thinking, we want to talk to you one-on-one. We want to find out exactly what your needs are so that we can help you out the best way that you need specifically. So hopefully that answers your question. We do these presentations honestly every month, and we do tweak it a little bit to make sure that we're staying current with market trends and what's kind of going on. So as far as bidding wars, things like that, we want to make sure that we're keeping up on all the trends with everything. So we do tweak this as we go along. But the basic is really to provide first-time home buyers with a really nice introduction into the mortgage and real estate process, and then we kind of tailor it down one-on-one by speaking to you directly through those booking links. So I recommend that you do click on that booking link. We'd love to talk to you and start your process along.
Awesome. Again, thanks everybody for you guys did awesome in the questions. There was great questions, lots of stuff. Hopefully we answered what we could. Again, keep clicking that booking link, get some calls going again. Look forward to talking with a lot of you here. So if that's it for the questions, I mean, I'll stick around for a little bit, but if that's it, we'll wrap this up. Like I said, I mentioned to everybody, I'll get you guys the link and the recording and all that stuff sent out hopefully by tomorrow, if not by Friday. But if you guys don't see it, um, reach out to me directly. I will get you a copy of that link. Sometimes it goes into your spam folders and things like that. But if you don't see it and you need it, just reach out to me. I'll get it to you directly. It will be up on YouTube anyways on my channel, but I'll get you guys that link. But again, thank you guys for taking time out of your Wednesday evening. I appreciate it. I always appreciate Ryan being here to help. Like I said, we worked together for a while. Ryan and I talk, I would say almost every day, it seems. Uh, Communication is huge, like I said, with this guy. So let us know if you guys are struggling with something. Let us know. We're not going to try and push you to buy something tomorrow. We just want to make sure you guys are okay and you understand what's going on and what you need to be done. And if you're saying, thanks, we're not ready for 6 months, perfect. In 6 months, we'll talk, right? We're not here to just say, hurry up, let's go. It's a long game for you guys, okay? So no pressure, no nothing. We're just here to talk and help out. So but yeah, Ryan, unless you got anything else to add, I think we can essentially wrap this up.
No, that sounds perfect, Andy, and you hit the nail on the head. We are here to help and walk with you all the way through the process. We're here to guide. We're here to be helpful, and we're here to help. Regardless of what that means on when you buy, or if you buy. We want to make sure that we're doing everything that we can to give you all the information to make the best decisions that you can make and to walk hand in hand with you all the way through the process to make sure that you're not alone, and we're going to do everything that we can to help you out all the way through it. So we look forward to talking to you one-on-one, and yeah, some great faces out there. Thank you again for the wonderful questions, and look forward to seeing everybody on those booking links and chatting one-on-one. You guys have a great Wednesday night and hopefully have a wonderful upcoming weekend.
All right, take care, everybody. We'll talk soon.
Have a great night. Goodbye.